Well, Boomer, this is our very first video.
Yes, ma'am.
My goodness. All right. So this is probably going to be our blooper video. So who knows what's going to happen on that. So Boomer, thank you so much for being one of my preferred lenders. I appreciate you so very much. I've sent a ton of my clients to you. So thank you. Thank you for always being so good about communication. I have to say, Boomer is great about communication. I love he gives updates to me as an agent, which I just love. And I know that my clients are really well taken care of by Boomer because he, when they are active, he is connected with them weekly. So if you need a great lender, I have Boomer here from Independent Bank. And Boomer, why don't you tell us a little bit about your business?
Well, first of all, thank you for trusting us. We definitely appreciate it. And anytime we can help your business grow too, that's the name of the game. I've been with Independent Bank for 19 years. It's crazy to think that.
I know you don't look that old.
Yeah. But we're I think we are the biggest Michigan-based bank. We just went over 160 years back in February, which we've seen a lot of ups and downs. Been through a few things.
Oh yeah, the whole industry has been through a few things.
Yeah.
So.
Change is inevitable. We know that. It's constant. That's the only thing.
It's the only thing that's constant is change is inevitable. There's always shifts in the market, whether it's the banking industry or real estate.
Real estate, we're all going through changes as technology, AI, everything. But what does not ever change, and you know this as well as I do, a roof over your head.
Gotta have a place to stay.
You gotta have a place to stay.
Absolutely.
And that homeownership, to me, is the first pathway to building wealth. Whatever wealth looks like to you, me, anybody in the office, our clients, if it's a number, if it's a lifestyle, whatever it is, you don't get there by renting for 30 years. That's just, you can't.
I cannot even tell you.
Can't do it that way.
No, you can't. And I am so passionate about that because home ownership is a passive way to make income. I don't care what the interest rates are. I don't care if we have 3% or 20% interest rates. You know what? You're going to be paying 100% interest to your landlord because you're paying their mortgage.
You're building wealth for them. Totally. You
are building wealth for them. So if you can get into a home, not only does it build wealth for you, but what I see is it builds stability in the families. Your children, if you have children, have a place to come home to. They know they have a place to go to. You know what your payment is going to be roughly every single year. You're not going to have, this next year, is my rent going to go up by $50 or $100 or more? Or am I not going to have a place to live?
Yeah. Are they going to find somebody else to replace?
Yeah. Did they sell your place? And so I am so passionate about home ownership. And even if it's not the home for your forever home, then, do a 3 to 5 year plan. I mean, it is the American way to build wealth, and it's passive once you get that house. Now, don't get me wrong. It can be tough the first couple of years, but it is so worth it because it gets better and better and better every year after that. Wouldn't you say that, Boomer?
Absolutely. I mean, if you work at a company and you're participating in a retirement plan, 401k, 403b, whatever, you're systematically putting money aside every month. A mortgage payment is the same, where you're putting away principal every month, and you're building equity. It's the same means.
I know, but for me, what was kind of an epiphany when I was watching some of my educational podcasts that I listen to, and if you say have $10,000 in your bank account and you earn maybe 5%, I just saw it the other day. They had a 13-month CD for 4.75. So say you're making 5% on $10,000 a year. You're only making $500. But if you took that $10,000 and invested it in a down payment on a home, you now are going to be making possibly 5% or more this year. Has been more equity built up in a home. So you're making that equity on the home's value.
Not your 10 in.
Yes, exactly. So now you're making that whatever percentage, 5% on 200,000, 300,000, 400,000, 500,000. That is a whole lot more money than $500.
That's leverage. That is
It
leverage.
is.
So,
I am passionate about this. So thank you again. Oh, we're getting off on a tangent again.
Passion is what separates us, and to me, it's what helps keep our clients motivated and not taking. There was a sign over there, something about taking your eye off the goal.
Yeah.
Like when you're looking for homes, it's easy to get distracted. But if you keep that goal in mind, our passion will help clients.
Absolutely, because it can be tough out there to find a home, make bids, lose to someone else on a bid, or be so close to gaining a house, but not. It can be very disappointing and frustrating, but you know what? When something is worth it, you press on.
Absolutely.
You press on and you press through. And so, I have to say, I absolutely love what I do because, I'm investing in people's future. Yeah. I'm investing in their future and their finances. And so it's helping people. And that's what I'm passionate about, is helping people. Yep. So, okay, now that we've gone into all that.
But that's the important part. That's the why.
That is the why.
That's why we get out of bed. That's why you take a call. I know you're going to see a client in a little bit here, and it's going to be probably 6:30 or what. I mean, that's late
night. Well, I've gotten emails from you at 2 a.m, so I know you do late nights too. So
that's what we signed up for.
It is. It's what we love. And you know what? It's not work when you love it. So
that's right.
All right. So today we're going to talk about myths for home ownership, because we're so passionate about it. We want to make sure you're educated on. Do you have to have 20% down, Boomer? I mean, you got to. I mean, that's a lot of money. Who can save that?
We fight that myth almost all the time. Mm-hmm. The 20% level for down payment is simply to get rid of mortgage insurance.
Yes, that's mortgage insurance. It's called PMI, which is one of those terms which, I'll have to do a video with what do these terms mean. Yeah. So PMI is...
It's basically an added cost that gets baked into your monthly payment that protects the bank in case there's a mortgage default.
So private mortgage insurance, what it stands for, right?
Yes, yep. Okay. And once you get past a certain point of equity, we don't require that. And that is typically that 20% mark. There are programs, one in particular, that you do not need PMI, but you have to be a physician.
Oh, okay. Well, we'll talk about those programs later. But for the most part, if you don't have a special case, if you have less than 20% down, you will have to pay PMI.
Very typical.
It's very, the levels are different for PMI. Yes. And we'll talk about that in another video. But,
you do not need the 20% down.
No.
There are 0% down payment programs.
Yep.
There are first-time homebuyer programs. There's actually 4 that we utilize all the time that are only 3%.
Yep, 3%, 3.5%.
3.5% for FHA. If your credit is weaker or we need to stretch your debt to income a little bit more, we utilize FHA. Mm-hmm. But for someone that's got no really solid credit, the 3% down payment program, we can use that all day long, as opposed to a lender that doesn't have access to those and they just automatically go FHA.
Now, what makes you different? Okay, so you're an independent bank and you say other banks can't do this. What makes independent bank different?
We have an awesome backroom and management team that they want to dominate the world.
Oh, I like it. Being Michigan-based, I really like that fact. Yeah,
it's the truth. We want to dominate. Yeah. We don't like being second in anything. So our program offerings, literally from A to Z and beyond. Mm-hmm. I'm doing one right now that my sales manager didn't think we could do, and we figured out a way. Okay. Because we have people that have a can-do attitude. We have underwriters literally that hound appraisers. Case in point, today I'm working with a VA buyer, and we've got an issue with the appraisal, and our underwriters take ownership just as much as our team on the sales and lending side. Okay. It's you cut through us, and it's a cross section. We're all wired the same. We want the best for the client.
Okay.
You
fight for your clients.
We fight, scratch, claw. In a good way.
In a good way, not a bad way. You will not be hurt. No one will be hurt in this process.
But we've got that program offering We are super competitive on rate, on cost. What we do is mimicked everywhere else. We're all within the same general ballpark with respect to rates and closing costs. Any lender.
Okay.
You can't be too far out of market. You can't be too high on rate. Otherwise, no one will want to borrow from you, and you're out of business.
It's that competition.
If you're too low on rate, then everybody wants to come join you, and then your back room ends up being a nightmare, and no one ever's closing on time, and word gets out, and you go out of business. So you have to be within the ballpark.
To be healthy, you have to be within certain parameters.
Yeah. So within an eighth of a point, a quarter of a point, that's pretty much where everybody's going to be. So rate shoppers, you're probably being misled if you're looking online because they hide costs. You know, there's a particular online company.
We won't say those. We won't say any names.
But somebody's got to pay for the clever commercials.
Okay. So let's get back to our subject at hand. So you don't have to have 20%
Not
down.
20% down.
They have 3%, 3.5%, and 0 because you have the RD.
Yes.
Like a rural development loan, if you do not need to live in a city area, if you like the rural area, they do. I had a client who closed and they only had to bring in like $188 for closing.
Yep. USDA, RD. Yep. It's a great platform. But yeah, there are maybe some location limitations.
Yep, there is. Yep. And there's a site that we can put the address in to verify and double check because not every agent knows how to check for the USDA rural development loan, and they put on their listing card, hey, it's RD. And it's not. It's not. So know who your agent is, know who you're working with because they have to have the knowledge to where to check these things out, or it's going to come down to closing and you're not going to be able to close. And so our whole goal is to get you to closing and get this thing closed and get you a home. So
start making memories.
Absolutely. Yep. All right. Anything else about the down payment? We do have to have closing costs.
Yeah, and that gets factored into what we call the cash to close needs. The title companies, the bank, we figure out all the numbers, we dial it in, and that's typically what the client needs to bring in to close. Usually a wire, or a cashier's check.
Yep.
There's a few components, and down payment is typically the biggest component.
That's the largest. That's the largest amount of money that you're going to need is to bring your down payment. So let's talk about closing cost, Boomer.
Yes.
What is in closing cost? Everybody hears, we have to have 0% down, 3% down, 3.5% down. But then there's this closing cost component that's above and beyond. Would you say typically for a buyer, that's going to be like 1%, 1.5%?
I don't really know what the percentage is. There's on the true closing cost standpoint, when you strip away like property tax setup and homeowners insurance, those are things that the bank doesn't have really any control over. They control the homeowners policy, who they get, how low that rate is, the premium. Property taxes, we just plug in the number. Now,
do you require 3 months, 6 months, a year of property taxes?
Wherever we're at in the year, we plug in the dates for the due dates, and the system automatically generates. Quite frankly, I don't even get into the calculations. I just, whatever it spits back
whatever that program tells you, he does it.
Yes,
so.
Yeah. I'm a good rule follower. But closing cost, typical closing costs are processing fees, underwriting fees. Those are what the bank or whoever you're working with.
Appraisal?
That's kind of a subcomponent or another component. So you got processing and underwriting fees. And if your interest rate requires you to pay points, that would also be kind of in that bank component.
Okay.
Then you've got third parties. So appraisals, credit report related fees, and then title insurance. Most of the time, the only variable cost, the only thing that really moves up and down is going to be your title insurance policy.
Okay.
And that's based on your loan amount.
Okay.
So title insurance is pretty standard across the board. If you've got a $100,000 loan in California, your $100,000 loan in Michigan, the title insurance policy is pretty much going to be the same.
Really?
Yeah, it's pretty standardized. You can't be way too far. Think of it as like liquor control. You can't just sell.
Stay within those parameters.
Stay within the parameters. So it's pretty straight across the board. The service levels at different title companies is really what differentiates the title companies, not the policy premium. So, but that component, the title insurance, is usually the only thing that really moves.
Okay.
Processing, underwriting, and appraisal costs are usually the same, whether it's a $100,000 loan, a $200,000 loan, whatever it might be.
Okay.
So if you get into a really expensive home or waterfront home, your appraisal might be a little bit more expensive because it's a little bit more complicated. But other than that, those three components are usually pretty much the same. So that's really the closing cost side of things. Then you've got prepaid insurance, like your homeowner's insurance. Your agent is not going to let you move into the house and have it insured for a year without paying that up front.
Oh, absolutely.
So you have to prepay that.
Mm-hmm.
That gets lumped into what we call the cash to close number.
Mm-hmm.
But the title company is collecting that money and distributing it to...
So really, closing costs are not just the banking fees. We got the third-party fees that kind of like all add up and to make a cost of a closing fee. So, but you definitely give those numbers to your clients.
Absolutely. And a while back, because of some things that were going on in our industry, there were some not great things going on. People were surprised with hidden costs. We've got a standardized closing disclosure. So it doesn't matter if you're closing in Detroit or Grand Rapids, you're going to have the same documentation that breaks it down, apples to apples, for your transaction. It's going to be very clear of what you are paying for.
Yeah.
And that was standardized, a few years ago, and it was very much needed.
Yeah, and I know that at least my title company, they verify with the banks and they make sure the statements are all verified, that they all have the same numbers, because title has done their numbers separately than the banking industry, and then they've come together to make sure that the numbers are correct. So I know that my title company gives me another sheet, and it's great because everything is spelled out. It's all there for you to understand. And of course, if you have any questions, you always talk to your lender or talk to your realtor and say, hey, I'm not understanding what this number is from, because we are here to educate you on the whole process of closing your home, so that you can get into your home, you can begin to make memories, and you can have a place that you can call your own. So thank you, Boomer, for telling us all about the closing costs. I appreciate that.
Most people don't want to know about that, like level of detail, but it's important because you're going to be paying for it. You want to know what you're paying for.
Yeah. So,
absolutely.
All right. Thank you, Boomer. I appreciate it. Thank you for being here again today.
Yes, ma'am. Thank you for inviting me.
I really appreciate that you're helping us figure out this whole real estate thing, because so many people think it's not a big deal. It's a really easy transaction. I'm just going to do this or do that, but it can be pretty complicated.
It's the biggest investment of your life.
A lot of money to be put on the line.
Most of the time.
A lot of money to be playing games with in Russian roulette. So get yourself a good realtor.
Yeah.
I am
Who you
here.
work with makes a difference.
It does. It does. It really, really does. And you could, of course, call me at 616-915-9995, because I would love to be able to help you get into a home that you love. And it's on the screen here. And Boomer, how can we get a hold of you?
My mobile is 616-902-0796.
Absolutely.
Usually with me 23 and a half hours of the day.
So. And we will put in the link below, we will put down both of our contact information, because we would absolutely love to help you. That is our passion. We are passionate about homes, home ownership, and we are passionate about people. So thank you for listening. If you've made it through the whole video, I appreciate that. And we will talk to you soon. Look for other videos. Click subscribe if you'd like to see more. Thank you.